5 a.m. in New York City, 10 a.m. in London. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Mulling exit strategies, futures rising as President Trump reportedly said he's willing to exit and end military operations in Iran, even with the Strait of Hormuz effectively closed. Oil wavers. On that report and news, Iran has struck a fully laden Kuwaiti oil tanker off Dubai. And fuel costs continue to climb, with U.S. retail gasoline rising above $4 a gallon for the first time since August of 2022. Let's take a look at these markets then. We were waiting for AAA to tell us that gasoline prices had gone above that $4 mark, but that is going to hurt U.S. households. You can see Brent crude coming down ever so slightly at 106.74, and WTI, that spread really narrowing, 102.51. So there is a lot of relief perhaps in this market, but the full final ramifications of everything that's gone on are still working through the system. To that end, we're getting inflation data out of the EU and Italy as well, and we already got inflation data showing that inflation had been rising much faster than expected in Germany in March. Look at the 2-year yield and the 10-year yield down a couple of basis points again at 432.05. And if we flip the boards and look at futures, we'll see that futures right now are up both in Europe and in the United States. We had the Nasdaq 100 down 0.8% yesterday. That might reverse today. Aluminum continues its gains, and gold up for a third straight day. All right, so those euro area preliminary March consumer prices up then by 1.2% month over month. So the ECB will be watching these figures very, very closely in order to figure out what they are actually supposed to do at the next meeting. Markets have been pricing in hikes at the next meeting, and in fact, several commentators actually feel like there should be emergency hikes from the European Central Bank. All right, let's get to some individual stocks to watch now. Here's Abir Abu Omar.
Good morning, Vonnie. Let's start with McCormick. This is a story that started with the early trade session in Europe. The other side of that story is Unilever. McCormick and Unilever are nearing a deal for McCormick to take over Unilever's food unit. Now, this is going to be $16 billion or nearly $16 billion in upfront cash. The equity component of that is not really clear yet, but a deal could be announced as soon as today. So investors looking at this leading to McCormick's shares to gain over 4% in the pre-trade session this morning in the United States. Now we move on to a different sector, and that is healthcare at PepGen. PepGen not doing well at all this morning, down over 45%, and this is on the back of disappointing or underwhelming results in an early stage drug that it is manufacturing for a genetic disease. So investors looking at that and not really seeing any positivity there. PepGen again declining over 45%, adding to earlier losses in the session. And then finally, a stock that is already trading on this side of the Atlantic, and that is Raspberry Pi, this AI stock. Vonnie, we've spoken about it before. It's adding over 24% in Europe this morning, and this is on the back of strong demand that is outweighing this shortage in memory chips. Strong demand from both the United States and China are leading to an advance in Raspberry Pi this morning. Bonnie, back to you.
All I heard was Raspberry Pi, Abir. It is close to 11s here in London, not so much in New York, though. That's Abir Abu Omar. She'll be back later in the hour. And coming up this hour as well, Sam Lynton-Brown of BNP Paribas will join us on the market impact from the energy shock. But first, President Trump signaling he's considering an off-ramp, telling his aides that he's willing to end the U.S. military campaign against Iran, even if the Strait of Hormuz remains largely closed. This is all according to the Wall Street Journal. This as Iran attacks a fully laden Kuwaiti oil tanker in the anchorage area of Dubai's port, damaging the hull and starting a fire on board. So let's get now to our team coverage with Bloomberg's Jumana Bersachi in Dubai, Washington Deputy Bureau Chief Laura Davison, and Alex Longley, who covers oil and also shipping. So, Jumana, has there been any let-up in attacks in spite of all this rhetoric?
Well, there's certainly a lot of rhetoric that has come out the last 24 hours. And the short answer to your question is no, there really hasn't. There's been an intensification of operations. And I will just flag what you were just talking about now, which is that A Kuwaiti a tanker that was fully loaded with crude oil was targeted by Iran. This was off the coast of Dubai port. And this is a serious anchorage point for many vessels that are looking to transit the strait. It's not on the Strait of Hormuz. Geographically, it's some ways away. But the point that it was targeted by Iran really just underscores the risks that ship owners have to face should they want to make that transit through the straits. Now, I will tell you, in terms of developments on that particular tanker, a couple of hours later, the Dubai media office put out a statement saying that the fire that was caused was extinguished. There were no injuries. There were 24 crew members, and thankfully they all escaped. And also there was no oil spillage, so alleviating some concerns there may be about possible environmental damage. But this, again, is just another manifestation of how this war really isn't over, and how Iran, even though they have asymmetric military capabilities relative to the US and Israel, are still managing to inflict costs, inflict damage, and also quite literally scare tankers and vessels from passing through the straits. And it's become a huge topic as we think about potential for diplomatic negotiations, and whether actually the Trump administration wants to include sovereignty of the straits in those negotiations or not, which is coincides with the Wall Street Journal reporting yesterday, and that perhaps the administration is thinking of delinking those two.
Laura Davison, let me come to you. Thousands of troops either already in the region or headed to the region. Is President Trump seriously considering risking U.S. lives in order to regain some kind of freedom in the Strait of Hormuz?
What the U.S. has been doing throughout this process is keeping all these options open. So Trump, while he's been talking about, negotiations and peace talks, which Iran has denied, by the way, saying that that isn't happening, the U.S. has continued to send thousands of troops to the region. There were about 3,500 that arrived over the weekend, thousands more that are still on their way. Really a huge buildup, and potentially 10,000 more that the Pentagon has talked about sending. This really is, sort of a dilemma because you have, President Trump talking about peace, a buildup of military troops, and then also, this most recent report from the Wall Street Journal talking about Trump may walk away from this war without securing the Strait of Hormuz and leaning on diplomatic options or allies to open that up, which would represent a huge loss to both the U.S., would mean that oil prices would likely remain elevated for quite some time, and also it would be a, kind of a way for Trump to sort of, not have any leverage over this process anymore.
Alex Longley, let's game this out. Say the president decides, OK, I'm going to walk away from this. The regime has changed, according to me, and the war is won, according to me, at least for us. Does that leave the Strait of Hormuz in any better of a position?
Well, not necessarily, and I think this is what you're starting to see from oil traders now. We've heard a lot from President Trump and also other members of the Trump administration in recent weeks about the prospect of kind of a quick end to the war. I mean, this began as much as 3 or 4 weeks ago when he talked about ending the war quickly, and we've had interventions since then that largely have kind of been geared towards lowering oil prices. And I think with the kind of some of the reporting and what we've seen in the last 24 hours, you've seen a remarkably small impact on headline crude prices. Brent crude fell a few dollars, but nothing major, and we're still well above $100 a barrel, which tells you something about what traders are looking for here. They're very much looking for an end to the conflict and free passage through Hormuz, not this kind of restricted level of transit that we're seeing at the moment. And that's really the kind of the significant issue for oil traders here. It's, can you get back to free transit through Hormuz? And as the reporting is at the moment, it doesn't seem like it in the short term. So
the Houthis obviously threatened to get re-involved in the Red Sea. Are we seeing any signs from shippers yet that they're getting a little more nervous about the Red Sea?
I don't think so particularly. I think the Strait of Hormuz is really the focus in terms of safety. But I think what you are getting is a real sense that that is a risk that is kind of bubbling up. And as they kind of re-entered the war entered the war and kind of re-entered hostilities over the weekend, I think certainly there was a higher level of concern than there perhaps would have been a few days ago. In the immediate aftermath of the war, I think there was a degree of concern from ship owners about whether you wanted to sail through the Red Sea, particularly to the Saudi port of Yanbu, which has been the kind of the main workaround for oil markets here. And I think that's kind of starting to kind of ease itself up now.
Laura Davison, $4 and almost 2 cents a gallon of gasoline. Is this the straw that breaks the camel's back, as it were? Does this get President Trump out of this war?
It's not clear that this $4 threshold is going to be sort of the decisive factor, but it is one of those psychological thresholds that American voters are going to face. You know, before this war started, gasoline was under $3 a gallon, starting with $2 on those big gas signs that people drive by every single day. So having a $4 plus, including in some states, which will be really competitive in the midterm elections, including California, these prices could be even higher, approaching $6 a gallon. So this, presents a big political challenge for Trump and the Republican Party, who are facing an uphill battle in these midterm elections. And these are the kinds of prices that, once they stay elevated, will be elevated for quite some time. They're not going to come down as quickly as they have risen. And this is going to be sort of the dominant narrative. This was always going to be an affordability election. Now it's an affordability election that really hands Democrats on a platter that they can point to Trump, the Republicans, and their actions as causing some of these price spikes.
Jemana, what's the thinking regionally? If the US declares its own victory and leaves, does that still leave the region destabilized?
Well, there hasn't been an official response yet from many of these Ministry of Foreign Affairs. And we do know that they have been actively, or at least some of them have been actively participating in some of the diplomatic efforts. And here, I'm not talking about the Gulf states specifically. I'm talking about other regional powers. Over the course of the weekend, we know that a meeting took place with the foreign ministers of Egypt, of Turkey, of Saudi Arabia, and this was in Pakistan. So some attempt there to bring about perhaps a diplomatic solution. But at the same time, I think, when it comes to the sovereignty of the Strait, the likes of the UAE have been very vocal in the last couple of days. Many of these senior officials, industry leaders, the CEO of ADNOC, likening what Iran is doing of the Strait of Hormuz to economic terrorism, and an outcome in which Iran still exercises sovereignty over who passes through the Strait would be an unacceptable outcome for many of these Gulf states, and not least because they're significant energy producers around the world. So it remains to be seen how they would really take on to this new potential plan out of the Trump administration.
Fantastic coverage. Thanks to all of you. That is Bloomberg's Jemana Bersetti in Dubai, Laura Davison and Alex Longley here with me in studio. Now to other top stories trending on the terminal this morning. Unilever is close to finalising a deal to sell most of its food business to McCormick. The sale involves $15.7 billion of cash up front, and the rest will be in McCormick equity. The deal will be the biggest in the history of both companies. It could be announced later today. Tottenham Hotspur's ownership feud has led to a disastrous season for both team performance and share valuation. The team fired its third manager in a year as former owner Dan Levy considers suing his former partner Joel Lewis. A UN study finds that Arab nations stand to lose nearly $200 billion worth of economic growth due to the Iran war. Widespread socioeconomic effects could lead to a loss of $3.6 million and million jobs even, and push as many as 4 million people into poverty. Coming up, the dollar on track for its best month since 2024 as the war rages on. We'll wrap up the month and the first quarter for markets next. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in London. Futures higher today as we head into the last trading session of the quarter. Let's take a closer look now at the entire quarter with Rob Turnbull of Bloomberg Intelligence and Bloomberg's Justina Lee. Justina, let me start with you. The dollar has been strengthening this entire quarter. Obviously, there's a ceiling. At some point, the dollar stops strengthening, but we haven't really seen too much of that yet. What has that done to the equity trade?
Yeah, it's been kind of interesting because I think this dollar kind of rally really tripped up a lot of expectations, given that a lot of people were actually positioned for the opposite results all along. But of course, we're kind of seeing the return of what is really a classic haven trade in terms of the dollar rally. And this is kind of both in terms of, obviously the dollar is always where kind of a lot of investors head to for safety. But I think it also reflects the fact that, with the U.S. itself being kind of, a pretty self-sufficient energy producer these days, I think it also reflects the fact that the U.S. economy in that aspect is expected to be relatively shielded from the effects of higher energy costs.
So, Rod, let me come to you. We obviously have had a phenomenally interesting quarter, but if we look at tech and NVIDIA in particular, NVIDIA itself is in a bear market now from a huge peak. Nevertheless, it's down 20%. from its October peak. What happened in the middle of the quarter beyond the war?
Well, it's interesting. I think you've got to look to inflation. So if we begin, Anna Wong's got a forecast out for the March CPI print, 3.4%. It's 100 basis points above what it was in February, and that's a year-over-year number. There was also a really interesting number last week, 1.3% rise in import prices, and that was specifically driven by tech hardware from Asia. So if you start choking off choke points, and making that more difficult to ship goods, particularly from Asia, and supply chains are fragile, it's just going to drive higher prices. And that's going to probably have some negative impacts on big tech, particularly where they've spent a lot of money, and the market's looking for a return on that now.
And then if you look at the SOX index, we're actually flat on the year. Who would have thought it? I mean, I know war changes everything, right? But is this the outlook now? I mean, when we get back to, assuming we ever do get back to trading the fundamentals we were trading before this, is there less confidence now in the semiconductor trade anyway?
I'm not so sure it's less confidence, but we're definitely going through a critical period where people are going to start reassessing risk, and they've been doing that, and that makes absolute sense. Equity markets aren't quite so sanguine as being flat on the year, and you're starting to see breaks through support levels, and that's going to have a knock-on impact on confidence. But I do think you come back to the fundamentals at some point. There will be a look for ideas when you get to the off-ramp of whenever this may end, and then you've got stocks like Broadcom, for example. We think consensus is way too low in revenue growth. They've got fantastic visibility in their new chip. They've got networking. We think it grows 15 to 20% more in sales terms than the market does. That's worth focusing on.
Broadcom. OK, excellent. Justina, let me ask you about fixed income, because we've seen some really interesting trends. So we saw money come out and then suddenly money is going back in again. What are investors worried about?
Yeah, I think investors are really torn between kind of the inflation picture and the growth picture. And we're kind of starting to see some short end yields come down. And that's partly because we've kind of heard from Fed Chair Powell kind of yesterday that they still think that long-term rate expectations are anchored. So maybe we don't necessarily kind of have to see a rate hike in the U.S. just yet. And, the Fed is really in a difficult position here because this kind of prospect of high inflation is driven by a supply shock, which they can't really do anything about. But at the same time, it is also kind of worsening growth prospects. So in terms of kind of balancing two sides of the dual mandate, that's kind of really put them in a bind. But for now, it seems like the Fed kind of still feels like maybe they don't need to act just yet.
Ed Yardeni was saying that the bond vigilantes kind of came out and did the Fed's work for it, right? Or the market's work for it. To a certain degree, now that we're starting to see corrections in certain pockets of the market, that would be true of equities too, right, Rod?
It would be. And there still seems to be a sanguineness, and certainly on the earnings picture. And I guess we'll see as we go through the results season, which is pretty much upon us. It'll be just after the Easter break. If we look at the S&P 500, for example, it's now trading on 19 times, derated from about 22 times. That's probably been an awful lot of inflation factored into that from the bond market that's had that impact on markets. So key, I think, going through the earnings season is not just what CEOs are saying about the longer term, what that outlook might look like if they're prepared to do so, but really about profitability.
Yeah. Justina, if we see a massive increase in oil, obviously the story changes again. But if we don't, has the market now started to trade more on central bank expectations than oil?
Right, exactly. And of course, that does kind of go back to oil. And, if we're seeing kind of what's happening in Europe right now, it's a slightly different picture than the U.S. Like we just had, Eurozone CPI kind of come out today, and also from France and Germany kind of more recently. And we're seeing a very clear sign that inflation is starting to go up and people are starting to price in a rate hike from the ECB and also possibly from the Bank of England kind of coming in June. And so I think in the case of Europe, we're seeing a very definitive sign that maybe the central bank will have to kind of hike in response to the oil shock.
Rod, are investors seeing relative opportunity in different places now? I mean, obviously, as Justina said, the ECB is expected to hike either more or sooner than, say, the Federal Reserve. Does that put investors in Europe in, a more precarious position, for example?
It could do. And I think all that said, investors will always be looking for things that they need to keep on the shopping list. And where we've gone into this crisis with stocks that were underperforming or undervalued or underloved or whatever it might have been, and sort of dusting off the copybook on that and looking into more detail. Yes, Europe gets in a slightly more precarious position, but there's some really interesting stocks out there just at the minute. SAP being first and foremost. Software, as we know, both sides of the Atlantic has been challenged. Again, this is one of those stocks of focus idea of ours where we think revenue growth, about mid-teens, should grow margin, It's got an enterprise business which is highly sticky, and therefore a bit more immune to AI. It generates a lot of cash, probably return cash to shareholders as an M&A story. There are things to like.
All right. Well, to listen to you guys, it's not all doom and gloom out there. Thanks to you both. That is Rod Turnbull of Bloomberg Intelligence and Justina Lee. Coming up, a look at what is making headlines in your front page news. That's next. This is Bloomberg. Time now for your front page news. First up, the Financial Times leading with reporting that Pete Hegseth's broker at Morgan Stanley tried to make a multi-million-dollar investment in BlackRock's Defense Industrials Active ETF in the weeks leading up to the attack on Iran. According to the FT, the broker contacted BlackRock in February. The inquiry was flagged internally. BlackRock, Morgan Stanley and the Pentagon all declined to comment. Next up, the Wall Street Journal reporting that the Iran war is choking off helium supply, the natural gas byproduct critical for AI chip-making tools and keeping MRI scanners humming. The shortage is threatening production of everything from chips to drone components. And finally, on the Washington Post's front page, President Trump unveils renderings of his planned presidential library tower in downtown Miami. They are outlined in a 100-second video on Truth Social and depict a skyscraper of glass and gold, including a golden escalator. Coming up, more on the risks around the energy shock with Sam Lynton-Brown. It's 5:30 a.m. in New York City, 10:30 a.m. in London. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Mulling exit strategies. Futures higher as President Trump reportedly says he's willing to end military operations in Iran, even with the Strait of Hormuz closed. Oil wavers on that report and news that Iran has struck a fully laden Kuwaiti oil tanker off Dubai. And fuel costs continue to climb, with U.S. retail gasoline rising above $4 a gallon for the first time since August of 2022. So we have a mixed bag today. Brent crude is finally back down below $107 a barrel, and that's spread to WTI just about $5 a barrel now, which is really interesting given that WTI has been trading so much lower than Brent this whole time. But obviously some relief in the market, and it's not because the Strait of Hormuz is any less closed. It's on the prospect that the president might pull out, and also on the prospect that there may not be any Fed interest rate hikes anytime soon. The 10-year yield trading at 432.25. Let's look at futures, because, of course, we had a down day yesterday in the U.S. Semis getting clobbered. They're all flat on the year, actually, at this point. But we might have a better day today with the Nasdaq 100 pointed to gains at the open. Aluminum does continue to rise, though, as does gold. That's a third day of gains now for gold. Let's get to some individual movers now with Abir Abu Omar. Abir.
Good morning, Vonnie. Let's start with McCormick. Now, this is a two-sided story because it also includes food giant Unilever here in Europe. It's not doing much, but McCormick is advancing this morning, pairing some gains from earlier in the pre-trade session, but still doing nicely, an advance of nearly 4%. And this is after talks to acquire most of Unilever's food unit. That will exclude part of Unilever's operations in India, but this comes as Unilever tries to focus on other industries, including personal care and beauty, as it sees that food in particular has been not doing as well as those other sectors. So that deal could be about $16 billion in upfront cash. We don't have a lot of clarity on the equity component of that deal, but it could be announced later today or as soon as later today. Moving on, we flip the board to another industry, and that is PepGen, which is not doing as well this morning, Vonnie. Now, this is a early stage clinical biotech company in the U.S. And the reason it is not doing so well, it is down 46% at this point in the pre-trade session. This is on the back of disappointing or underwhelming results in a drug, an early stage drug that it is producing for a genetic disease. So investors looking at that news in the drug, in the early stage trial of the drug, and seeing the stock declining, again, 46% decline this morning. And then finally, Raspberry Pi. Our favorite stock this morning is doing quite nicely, nearly 27% advance. In Europe, it is already trading here in the UK, and this is a small computer manufacturer, is doing quite well on the back of demand from both China and the U.S. It's seen a 25% increase in sales, up for the past year, again, from demand in both China and the United States. A good story for this stock this morning, Bonnie. Again, almost 27% up, Bonnie.
Yeah, I remember looking this up before. It's a tiny little computer used in schools and in all sorts of areas, and doesn't cost that much. And it's a fascinating story. Abir, thank you so much. Abir Abu Omar. Sam Lynton-Brown of BNP Paribas saying optimistic on stocks, writing that markets are well hedged for the downside and earnings momentum remains positive. Joining us now is Sam Lynton-Brown, Head of Global Macro Strategy at BNP Paribas. Sam, why are you so optimistic given that there are so many uncertainties out there? We have absolutely no visibility into what the Fed will need to do. We have no visibility into what oil is going to do just the rest of this week, and it's a holiday shortened week.
Good morning. It really depends what you look at. So I wouldn't say we're positive when we look at energy markets. We're not positive. The view that we've had since the war started is the market was pricing too quick a de-escalation there. The market was too complacent. So we still continue to see upside scope for both oil and gas. Similarly, currencies, we're not positive. We think that the dollar is going to rally further. We think the market is underappreciating the positive dollar impacts, both from higher energy and the fact that the US economy should be outperforming the rest of the world. The distinction I draw, though, as you point out in your introduction for stocks, is that the market's already de-risked. So when we look at our proprietary quantitative positioning analysis, it shows that US equity positioning is extremely light. The market's well hedged for the downside, while at the same time, earnings momentum is still positive. So on a relative basis, we'd say equities are better insulated than, say, the energy market or the FX market, given the technical setup.
Just want to have a listen to what Fed Chair Jay Powell had to say yesterday at Harvard. He was taking questions from students and talking about inflation expectations. Let's have a listen. Well, what he actually said was that they do appear to be well anchored beyond the short term. Nonetheless, it's something that we will eventually face the question of what to do about here. Sam, how long do inflation expectations remain well anchored if gasoline is $4 and nearly 2 cents a gallon in the US right now on average?
I think for the Fed, they can be a little bit more confident here because the impact from what's happened so far is less inflationary for the US than it is for Europe, the key difference here being gas. The sensitivity in Europe to higher European natural gas prices is much higher, while US gas has moved comparatively less. So I think it makes sense that the evolution in rhetoric from the Fed has been less hawkish than we've heard from the ECB across the past month. Our view is that the Fed's neither going to hike rates nor cut rates this year. We haven't had any rate cuts, I should add, since actually November of last year in our projection for 2026. So we've been more hawkish than the market on the Fed, and we think that view still makes sense. For the ECB, it's more challenging here because the ECB are, and we'd argue, sort of rightfully more concerned about inflation expectations. We saw the inflation print we just had a few hours ago in Europe, big increase. That was expected, but the problem for them is the proximity to 2022 means they're a little bit less certain on how well anchored expectations are, while at the same time, labour markets in the Eurozone are quite tight. So we think it's likely we continue to hear quite hawkish rhetoric from the ECB, while the Fed will sound more balanced.
You say markets are well hedged for the downside. I'm sure people who lost money in the last few days, would rue that statement. But how are they hedged? Where are people looking for hedges?
I'd say as it relates to stocks, it's broad-based. So our positioning metric shows a broad-based de-risking from all different investor types, from volatility target
do you mean
funds,
going to cash, or how do you mean?
Investors like. When we say well hedged, we mean light positioning. So they own less stocks than they typically own, and that's observed from a full range of investors. And they own hedges on the downside. They buy puts spreads, they buy puts that knock out on the downside, various different expressions that mean that if stocks come down, they're less exposed. So I think the key here is stocks are going to be very sensitive if we were to see any signs of de-escalation, and more sensitive than other asset classes like FX and perhaps rates as well.
Are there any areas of the market that you particularly like? Obviously, the SOX is, flat on the year now. It's erased all of its gains on the year. The likes of Nvidia down into a bear market, down just more than 20% from its peak. But given where some of these stocks were, that might not be considered too richly valued even now.
Yeah, I think fair point. The additional asset class I'd point to is US long-duration defensive investment-grade credit. We think the view there also makes sense to be bullish. Similarly, sort of positive technical backdrop to equities. So there we'd be more open-minded to adding some risk, in contrast, again, to commodities and to FX, where we'd recommend a more defensive approach.
When you say defensive investment grade, do you mean certain areas of investment grade credit or just broadly anything investment grade?
Broadly long duration, 25-year plus investment grade in the US. We think that should be quite resilient.
All right, Sam, thank you so much. Sam Lynton-Brown of BNP Paribas. Now to other top stories trending on the terminal this morning. Eurozone inflation spiking. Consumer prices rose 2.5% from a year ago in March as the Iran war pushed energy costs sharply higher. That's the biggest jump in inflation since 2022. Tottenham Hotspur's ownership feud has led to a disastrous season for both team performance and share valuation. The team fired its third manager in a year as former owner Dan Levy considers suing his former partner Joe Lewis. Long airport waits show signs of easing after TSA officers received most of their missed pay. Airports are still generally warning passengers to arrive 2 hours before their flights, but some, such as George Bush Intercontinental in Houston, have wait times of just 10 minutes. TSA officers have been paid retroactively for their last 2 pay periods, but they are still owed the balance of their first missed paycheck. Coming up, President Trump reportedly weighing an exit from the Iran war without being too concerned whether the Strait of Hormuz is fully open or not. More on that next. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in London. Attacks continue in the Middle East. The latest coming from Iran hitting a fully laden Kuwaiti oil tanker off Dubai. It comes as President Trump has reportedly told aides he's willing to end the U.S. military campaign against Iran without fully reopening the Strait of Hormuz. That's according to the Wall Street Journal. Joining us now is Mika Sullner of Bloomberg Government in Washington. Mika, if this journal report is all factual and President Trump did indeed say that, then why are thousands more troops headed and in the Middle East?
Yeah, thanks, Vonnie. The White House is really focused on making sure that they can meet the initial timeline that they promised, the 4 to 6 weeks. Press Secretary Caroline Leavitt was actually asked yesterday about what the administration is doing here to wind down the war and essentially meet that. We're heading into week 5, as we know. And she said that, this still gives them some time and that the president is very adamant that he wants to end things as quickly as possible. So I think that in some ways they know that they kind of shot themselves in the foot by establishing that timeline while there's still more work to be done in their eyes. But we should get an update here this morning as well from Defense Secretary Pete Hegseth.
Yeah, the Pentagon hopefully will clarify things a little more for us later on, as you said. But there's several deadlines now. There's the April 6th deadline as well. So it's hard to know what deadlines are operational and what are not. What happens if the U.S. does indeed decide to pull out and the Strait of Hormuz is in the same situation that it is in now, i.e. effectively closed?
Yeah, look, I mean, the administration is very aware that this is having deep impacts right now on fuel prices and it's affecting consumers at the gas pump. And this is a huge problem for President Trump in an election year where the White House is already struggling with having an effective message on affordability and cost of living. And now they know that gas prices are becoming a really big issue. And they're promising voters that they're going to do whatever they can to bring down costs and they're going to come down as quickly as they went up due to this the military operation in Iran. But right now, there seems to be inconsistent messaging coming from the White House and as well as the U.S. and Iran in terms of where things are, where diplomatic talks are, and when exactly things are going to slow down here.
How does the president message $4.02 a gallon to the U.S. public? I mean, literally a couple of weeks ago a month ago before the war started, we were talking $2.98 a gallon on average.
Yeah, I think this is a huge challenge. We've heard White House officials try and reassure the public, saying that once this war in Iran slows down, they're confident that things are going to get back to normal, quote unquote normal. And they have also said that they believe that the administration is going to try and focus on energy independence as they've done. But right now, things are not looking good, and consumers certainly are starting to feel it based off people who I've talked to who voted for the president and who do continue to support the president on all fronts are still saying that gas prices are becoming a problem. Affordability is an issue.
Yeah, absolutely. Mika, thank you so much. Mika Zollner there of Bloomberg Government. Let's get more on those fuel prices now with Bloomberg's Emma Ross Thomas. Emma, I suppose it was only a matter of time given that oil was going higher, but we did see the Trump administration try to make some concessions here, waiving the Jones Act for 60 days and so on. Does any of that make a difference to fuel and refined fuel prices?
Yeah, so I think the Jones Act had the waiving of the Jones Act had a pretty marginal impact. And you're right. I mean, Trump made comments, didn't he, that we don't need the Strait of Hormuz. But I suppose what you're seeing here is just a reminder that, the oil market is a global one. And so while the US is a massive producer of oil and, self-sufficient in some respects, the price is set globally. And so American drivers are going to be affected by this. As you were saying earlier, it's $4 now from below $3 just a month ago. It's pretty remarkable. Yeah,
it's a huge difference in pocketbooks. Brent trading at 107.42 just on those comments. I mean, even if it were true and even if it all happened and came to pass, would that be a correct price for Brent, given how much is stuck on either side of the Strait of Hormuz?
Yeah, I'm not an oil trader, so I'm not going to go there. But what I will say is that I think it's so difficult to imagine how you get back to pre-war normality with the Strait of Hormuz, isn't it? At the moment, it's effectively shut. Some ships seem to be negotiating with Iran, perhaps paying in order to go out. But it's very much a trickle. People talk breezily about escorts, thinking back to the days of the 1980s, the tanker wars. I think some of my colleagues have estimated that the US Navy alone wouldn't be enough, even if they wanted to do escorts. And we haven't really seen that anything beyond rhetoric. The US Navy alone probably isn't big enough to do that. We've also seen this legislation in the Iranian parliament talking about normalizing this idea of tolls. So this idea that Iran wants to use this conflict to establish a regime in Hormuz, a toll-taking regime in Hormuz, which is much more unfavorable to the oil market and, of course, those Gulf oil producers than the status quo ante. And I think all those things are really intractable. And even if the war ends tomorrow, we still have the prospect, don't we, of asymmetrical activity in the Strait.
Yeah, absolutely. And the Houthis also threatening, to get active in the Red Sea if certain conditions happen to be, met or bypassed.
Yeah, to be clear on that, I think we haven't seen specific threats from the Houthis. So far, we've seen strikes on Israel, haven't we? And we've seen language. We had a report yesterday from Western officials saying that their understanding was that it was sort of conditional upon an escalation by the US. So for now, the Red Sea, the Red Sea appears to be still an effective bypass, but that's certainly something that we're watching.
All right, Emma, thank you so much. That is Bloomberg's Emma Ross Thomas. Turning to deals now, shares of McCormick rising in pre-market trading ahead of its earnings set to come out before the bell. That's as Unilever says a final deal to sell most of its food business to McCormick could come as soon as today. Let's bring in Bloomberg News' Deirdre Hipwell. So Deirdre, what do we know so far? McCormick, this spice maker, Cholula, hot sauce, and so many brands that we see on the stores.
Absolutely. We've had kind of a halfway house announcement from Unilever where they've given us some of the deal terms, but not all. So I think we'll get to the meat of the matter later today when the US is fully open and we potentially the deal's confirmed. What we know so far is Unilever is going to get about $15.7 billion in cash, and then there'll be a component of McCormick equity. They haven't detailed that yet, but what they have said is that there'll be a combined company where they will have 65% of the equity. So on the face of it, at this point in the morning, it looks like Unilever is still going to own a food company, but McCormick's going to be running it. But either way, it's going to be a big transformational deal for both companies.
It's been a while since we've seen a reverse Morris Trust deal, right? I guess it's just one of those deals that you see from time to time. Does it work for McCormick? I mean, French mustard, hot sauce, Old Bay spice and so on, can it take on the Unilever brands?
Definitely. I think McCormick has been expanding through acquisition, and basically following this deal, it is probably going to be the king of the condiments aisle because it's going to have spices, seasonings, sauces, and of course it's going to have the two really big power brands that Unilever Food owns, that is Hellmann's mayonnaise and Knorr stock cubes. One thing I should say is it won't be getting Unilever's India operations because it looks like that's going to be carved out.
That needs to be their new tagline. You need to get credit for that. King of the condiments aisle. Now, talk to us about Jetro, because Jetro is a fascinating company. The founder is 94 years old. It's finally getting sold to Cisco, and it really is just a huge story.
Absolutely. I mean, the deal strategically makes sense. If it goes ahead, they will pretty much be like the leading food service group in the US. They'll be, providing food to restaurants, hotels, hospitals, as well as the smaller independent restaurant chains. The one thing I would say, though, is the Cisco shareholders don't seem to like it. The shares closed down about 15% yesterday, I think, which was the biggest one-day drop since March 2020. And I think that's because there's some concern about the execution risk because they're having to pause share buybacks to finance it. They're taking on debt. And with the world so uncertain, as you've just been talking about, it's an interesting time to be doing such a big deal. From the Jetro point of view, it makes a lot of sense. I mean, the multiple on this deal, 14 times, Jetro's operating income. I mean, I can see why Nate Kirsch might want to sell out. And he is 94 now, so getting on, as you said.
It's such a storied company. And again, it serves 725 smaller restaurant owners, but also has a cash and carry business, too. So it is a really interesting company. Deirdre, thank you so much. Deirdre Hipwell there, covering all those deals for us. Coming up, we're going to get you set up for your trading day. There's jobs data on deck and more Fed speak. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in London. Now a look at what's ahead today. First up, we get the JOLTS survey and consumer confidence. Those data coming at 10 a.m. Eastern. Then Fed speak from Goolsbee, Schmidt, Barr and Bowman throughout the day. And then after the market close, we get Nike set to report earnings. Let's take a look at your commodities now. This Tuesday session, we have Brent crude coming right down, although it's back above 108 a barrel. But that's spread now at only about $4 a barrel, with WTI, which is creeping higher, 104.13 now. Aluminum continues to make gains as well, of more than 2%. Helium in shortage too, according to a story on the Bloomberg today. That's it for Bloomberg Brief. Surveillance continues the conversation. This is Bloomberg.